Hi, this is Brian Mako from Rocky View Entrepreneur Series. And as you know, I bring on people that are extensions of my practice, people that are my clients or people that can help my own clients do things. And so today I have Dylan Laverty, who is a mortgage broker. And so Dylan, I know you help people get loans, and today is a perfect time to talk because so many people are so stressed about the increasing rates, and everyone's going to go to 5% as soon as they renew. I'm already at 5% because I have a line of credit that's been hit. Every time there's been an increase, I paid more, and that's going to really hit people right in the face if they have to renew in a year or two. So this is where you get to shine because you can probably help people. So anyways, Dylan, tell us about you.
Yeah. So hopefully the shining part comes to fruition. That's the goal, at least. My name's Dylan Laverty. Thanks, Brian, for the warm welcome. I appreciate the partnership as always. A lot of what we do these days is educate. So why don't we start with who am I? It's tough to trust someone if you don't know who they are or where they're from. So grew up, born and raised Central Alberta in a small town named Delburn. You probably don't know where it is. It's a blip on the map. You miss it on the highway, but fantastic town, taught me a lot of fantastic things. Since then, I've been all around, but I've been providing financial advice and literacy education pieces for, well, just about working towards 7 years now. So I'm aging quick. I got my first gray hair recently. So that was a big change. I've done everything from advisory positions to bank management within one of the big financial institutions. And now I've been in the mortgage world for about 3 years. So stepping into the broker side as of 2023.
And only one gray hair. Wow, that's pretty good.
Yeah, hopefully we keep it there.
Yeah, there you go. Exactly. So what are some of the differences between what mortgage brokers do and what banks do? Like we think about the big banks, and they're very, structured, and they're very limited in terms of what they can do. But mortgage brokers seem to have, so many different kinds of solutions.
Yeah, great question. Obviously coming from, I'll drop the name here, RBC for just about 6 years and transitioning onto the broker side. Loads of questions, right? Large portion of my clientele either belong to RBC or to one of the other big financial institutions. And I guess I would start with and say that we all have the best, benefits in mind for the clients, right? We're trying to find solutions that work for you. We're trying to build a plan, and basically you and I are a team. So no difference in terms of who's got your best interest at heart. You're working with the advisor. It's the individual that you trust. One of the key differences you kind of taptoed around the answer is when I was with RBC, we were limited to and selected with, only a finite amount of number one solutions, but number two options in terms of, self-employed people versus personal people versus bruised credit, XYZ. Stepping on the broker side, and one of the key reasons that I made the change I made was because of the flexibility and the ability to pull files from one place to another when it best suited the client. So that could range from everything from, stated income for business owners to, credit flexibility. So if we have beacon scores lower than 620, ranging to as low as 500. We found solutions for those individuals as well. So it really brings forward to life the possibility and likelihood of owning a home one day, because that's, ultimately all my clients' goals. And I'm sure you find the same thing. So that's number one reason. Number two reason and misconceptions that I often see between that big bank and the broker side is who pays me. So I'm still free to the client in all circumstances besides private deals. The exact same way that a bank works. And number two is mortgage brokers only deal with clients who have bad credit or bankos or, consumer proposals, and that's simply not true. I have access to multiple of the big banks, Scotia, TD. I have a bevy of A lenders that deal with clients like hopefully you and I, on the positive side. So ranging all the way to private deals. So, the flexibility was reason number two.
Oh, Excellent. But I think there's going to be so many people asking questions like, what can I do now? Things have gone so much higher. I myself am paying 2.6 times more than I was before. So yeah, I'd love to talk about options. Um, what do you think about our economy and how things are going right now? Do you think that we still are going to have more inflation, or do you think that the central bank has put up enough, barriers to that with the lending rates?
Yeah, great question. Something you and I discuss on a frequent basis, don't we? It's funny that you and I have become such a topical piece. Mortgage brokers and accountants. Once upon a time were a pretty boring topic, but now we seem to be our friends' favorite friends. So, yeah, no, it's an absolutely crazy time. I think, with interest rates the way that they are, I run my business not to be an interest rate business. It's obviously a key piece of a transaction, but finding solutions and plans that work for clients are number one. That's kind of had to change slightly with, interest rates leading conversation, because it really isn't driving a huge impact right now. As you've mentioned, we've seen inflation fly all the way up, 6-7%, and fly all the way back down as recently as 2 months ago. We were looking at 3.3% with a target of 2. So things were looking positive. We'd seen declining every single month, with the exception, I guess, of that month, but it was more stabilizing than it was increasing. And then last month, out of nowhere, we seen a jump up to 4% again. So, when you ask me the Bank of Canada rate and its impact and factors when it comes to prime rate, it's really, really tough to say. If you had asked me 2 years ago, I would have said there's no way we get here. So, following those economic reports and having someone who's, educated in that space, is really, really important. I know myself and you have had multiple discussions with regarding, who you're reading, right? Are you reading from one source or multiple sources in order to build your own opinion? And, as interest rates have risen, it really depends on consumer spending, right? Cost of materials, XYZ. Obviously, I'm not an accredited economist, but I do read lots of reports from multiple people. And, we thought there would be an increase to 3.8%. And this 4% was a little scary. Fuel was a big part of that. So, the Bank of Canada is always going to remain to use the term hawkish, which is basically, another term for non-committal. So they're not willing to say, hey, we're going to leave it the same or decrease it or increase it. We're going to play it by ear. And I think as consumers, we're stuck to the same premise. And, I don't see any meaningful decreases in that, that overnight rate, the prime rate for, at least first quarter 2024, possibly second quarter. So, for those variable rate holders, they need to have a conversation, whether it's, individuals like yourself with a home line, individuals with open lines of credit, everything basically. If you have any variable component, you need to be having those conversations.
Yeah, yeah. Well, it's amazing. Like, well, we can't predict what's going on. None of us really saw what was coming. So, anyways, okay. So, why not tell me, Dylan? Let me ask about you. What is your most recent success? What's your best story that you can tell about? What you've been able to do for someone recently.
Yeah, absolutely. So, with them, it's not doom and gloom about the rates. As my parents would say, it is what it is. We're not in control of it. All we can control is what we do. And that's kind of the approach that we're taking within my business, and it's working great. So, a major success story, actually, I'm quite proud of is a referral from another client was kind enough to make a referral to me of their parents. We were able to, amalgamate some unsecured debt. And this was a couple months ago, and it freed up $1,500 cash flow. And that's interest only cash flow that was kind of fluctuating with the interest rates, and they seen spikes in their payments, and, everything was in dire straits. And what we were able to do is take some of that equity in their house, do a little refi, pull everything together, blend the rate. And we were able to, like I said, decrease their payments $1,500 a month and start paying that principal down. So, it was a massive change for them, and they've been kind enough to forward the word. So that's something a success story I would classify.
Oh, that is awesome, Dylan. Well, we should probably wrap this up. I guess we're right around 8 minutes now. Some people stop listening to us in a minute here. But anyway, this is Brian Manco and Dylan Laverty of Mortgage Connection. His email address is lavertymortgages@gmail.com. His phone number is 403-888-7836. Contact Dylan anytime, and I'm going to send this to a lot of people.
Awesome. Thanks, Brian. Pleasure.
Well, thank you, Dylan. All the best, man.